The information provided in this video is for educational and informational purposes only and should not be considered financial, investment, tax, or legal advice. Investing involves risk, including the possible loss of the principal. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The opinions expressed are those of the host and the guests and do not necessarily reflect the views of any affiliated organizations. Okay, so today is the 22nd of June. We're changing the format slightly. Instead of doing it on a Friday, we're just going to do it on a Monday morning. So we're going to reflect what happened last week and look forward to what's happening this week. So we can see for last week, big changes, three big changes, oil down 9.33%. It looks like there's peace in the Gulf, but every time there's peace, oil goes back up again. So it's something which I'm not taking it too seriously yet until there's something signed and all done. The biggest movers of the week we could see was the Infotech in the States up 3.71%, and the banks in Europe were up 6%. Now we think the banks are up for two reasons. One, with the interest rate changes that the ECB are starting to indicate that they are going to start hiking rates up, and secondly, is that UniCredit is trying to buy Commerzbank, so there could be a bit of bank consolidation. It's quite possible. So I think that's one major reason why the banks are up so high. The big news was SpaceX. SpaceX had their IPO. The IPO value that they put on the company was $135, which valued it at around 1.7 trillion. On the day, though, on Friday, it opened up around 50. It headed up to high of 229 on the Monday of last week. Now it's come off again, and it's currently trading. Just have a quick look here. It's currently trading 178 and a bit, which, curious enough, means that most people who bought SpaceX after the IPO, i.e., they did not get allocation of shares in the IPO, are now they're now facing a negative balance on what they bought. We're going to have to wait and see what happens with this. With these IPOs, they take quite a long time to drift through. One good thing, though, for the company itself is that Kathy Woods of the ARK portfolio, she bought $500 million worth of shares for her portfolio. So we're really not going to get a value on this until around 2027, because really it's less than 5% of the shares have been issued. So once the rest of it comes out, then we will find out what the real value of this firm is. Currently, it's very hard to know what's going on with the volatility in it. An interesting thing that somebody pointed out, which is SpaceX employs 25,000 people, but technically a lot of them have now become millionaires owing to the issue of these shares. So a big problem is how do you keep millionaires who are working for you when they're going, it's made quite a bit of money out of this, I might just leave. We don't know, though. The S&P, it is trading in NASDAQ because they did change the rules on that, but the S&P has said that it must trade for a year and become a lot more transparent on its accounts before they add it to the S&P. John, what did you think of the IPO yourself? Did you follow it, or?
I did follow it, yeah. I think it followed the standard IPOs. The initial, once the shares came into trading, it took a pop to the upside, which is very common for IPOs. A lot of funds, a lot of ETF trackers have to actually buy those shares now, regardless of price, right? I kind of feel if they put a valuation of $1 trillion on the company, it would have jumped 20-30%. I also feel if they put a valuation of $3 trillion in the company, it also jumped about maybe 20-30%. So I do know that a typical pattern for IPOs is when they first start trading, they take a pop to the upside, there are people locked in, and the pop is simply a supply demand imbalance. There are 4 times as many people wanted these shares as got them. So now a few people have bought the shares. It's a little bit worrying. It got up to about 220 and it's come all the way back to 180 already. So I'm a little bit wary of it. I have no idea about the valuation. And my biggest concern about the company is the personality risk, which essentially is you're buying that share, you're buying Elon Musk, and his performance, his past performance, his future performance, and for me,
so personal risk.
I'm not massive key personal risk. Yeah.
He has put a lot of his companies into this, including X and companies like that. So it has become the sort of putting everything into one firm. So because I'm not saying there's anything dubious going on, but it just seemed that it's an incredibly high valuation for a company that's not making money yet.
Yeah, and you mentioned as well about the S&P. You know, it turns over 18 billion quid every year, and it lost 5 billion last year, or close to 5 billion last year. It actually has to make a profit also before it can go into the S&P. They won't allow loss-making companies join.
Is that right?
Yeah, there's a few hurdles before it gets into it.
Okay. Jeff, were you a buyer at 229 at the highs?
Yeah, I think what we're kind of mentioning there, maybe the retail hype, which is kind of pushing a lot of it as well, right? And the Morningstar did a kind of they did mention about that sort of the passive funds and money flows that are going to flow into the stock through the passive funds having to buy into it, you know.
Mm-hmm.
No, I'm not. No, I kind of knew it would pop on the open because, you know, it's not the nature of investing now. Like, you know, we're all buying, you know, what we're advertised at. You know, I mean, the fundamentals, you know, break them down. I you know, it doesn't really stack up. But I suppose if we colonize the moon and we're able to make water from there and stuff, and he's able to do all that, then the stock's probably very undervalued.
Probably.
You know?
I think that's also one big thing is that they're going into the Russell 1000, which is that's the Russell 1000 traditionally is a sort of pension fund thing. It's not, you know, it's not really built for stocks like this, but they have changed the rules, which means it is going into it. So the fund manager will be forced to buy to rebalance the Russell 1000.
Phil,
Now,
whether it's this coming week, if not into the end, I think I saw somewhere. They see something like the 26th or something like that, or
okay, so then that's when they have to start buying to go in. Okay, so just looking at the new Fed chairman came out, Mr. Borsch, during the week. John, did you have any opinion about his speech, his first talk?
Yeah, I was quite impressed. The worry, I think, for myself and the market was that he was going to do exactly as Donald Trump wanted. Donald Trump he's been very, very critical on a professional and personal level of the Fed Chairman Powell in the past. And I thought he wants somebody in there who'll do exactly what he says, who'll keep rates really low. And apparently, well, that's not what's happened here. Warsh was very impressive. He was saying that the Fed has two mandates: to keep maximum employment and to fight inflation. And he said his comments were inflation has been over 2% for 5 years now, and that's going to stop. So he actually re-emphasized, yes, they're going to tackle inflation, and this was seen as quite hawkish. So rates actually went up on this, and this is exactly what Trump was giving out to Powell about. So it seems like the Fed is going to maintain its independence, which is very good for the dollar long term. And I think the markets would rather someone who knows what he's doing. He's got a good background from Morgan Stanley. He's been on the Fed before. I was quite impressed with him actually. Yeah.
Had Trump fired the head of the Fed? Does anyone know that?
No, he technically can't. He can make him a lame duck, like he kind of did with Powell for the last part of his tenure.
Yep.
What do if you announce, okay, this is the new Fed? He announced them like a long time before he was due to take over, so people are paying more attention to him than the current chair. But no, he can't fire him. The Fed is meant to be independent, and Trump has definitely tested that independence. So hopefully it stays that way. I mean, the market needs an independent Fed. The dollar needs it. No.
You know, technically, it's like it's literally an independent company.
Yeah.
You know? So,
well, it is, but the actual Fed chair is nominated by the president. And the fact that Trump backed Warsh to be the Fed chair kind of said, oh, this guy's going to be towing the line. But no, he started off well. He's asserted himself. No, I'm doing what the job is asking for. I'm fighting inflation.
Nice.
And that's my target. And I've re-emphasized this with everybody on the board. This is what we've been paid to. This is what we're getting paid to do. So that's good news for the markets.
Jeff, did you listen into any of them?
Yeah, I did. Yeah, I think the note about price stability really is this kind of key thing there. You know, and as John was mentioning, you know, that therefore kind of leads into not maybe just cutting rates for the sake of cutting rates and not being, maybe trying to be a little more independent. And I think the 2-year yield rose on the afterwards as well, sort of, reflecting that it's not going to be just doing what Donald Trump says, that it could be independent, and they're looking at obviously what's going on in Iran, with any kind of inflationary elements following through.
Someone said a very good point about Trump, and if Trump from a building background, construction background, you talk to anybody in the construction business, all they want is just low rates. That's all they want. So it's a sort of, it's in their heads, that rates have to be low, rates have to be low, rates have to be low. So it's kind of, I can see why Trump keeps saying it,
But it actually makes sense from a building perspective, doesn't it? I mean, or if you're any kind of, if you're a mortgage, or you're borrowing at 4%, 5%, or 2%. Right.
And actually, that's quite interesting. I talked to somebody who runs a construction company, and I was talking about the cost of putting up a skyscraper and the margins on it, and I was quite surprised how low they were. 7-8% on some projects. So if you're paying 4% interest or 5% interest or 6% interest, that's a huge chunk of your profit. The difference in those rates.
Okay, so when you pick the PCE inflation number out of the US on Thursday is one to watch for this week.
Yeah, I'll just say what it is. It's the most watched inflation figure from the States. It's personal consumption expenditure. It's what the Fed uses to gauge inflation.
Right.
And after Fed Chair Warsh's speech, it's the number they're going to be looking at, and this is going to move the markets. The number comes out on Thursday. When it comes out, the market is going to jolt whether up or down on the back of it. So it's an important number.
Important number. I picked out a stock as well, which is out on Wednesday after the market closes in the States. It's a company called Micron. It's a huge run up, all part of this whole tech boom. I'm not going to call it a bubble because it's bubbles are only bubbles when they burst. It's a boom. So it's Micron is reporting after the market closed on Wednesday, and if you look at its weekly price, its volume weighted weekly price is about $450. It's currently trading at $1,150. So I'm very curious to see how the market is going to react to this, because it's roughly
didn't they hit 1 trillion there recently, wasn't it? Or?
I think they did, Jeff. Yeah, and so it's just, I think this is the first of the big ones. Well, not first. This is one of the big ones this week. And I think it'd be curious to see how the market does react to this. And, if they do like it, then we'll keep going. We'll just see. And it's just one for me to watch, which is out on Wednesday. So we'll keep an eye on that. Okay.
No, I suppose just in Europe, maybe the German IPO's out. It's not a huge sort of number, but it does sort of indicate maybe again sort of how Europe could be stuck in the doldrums, just in terms of the economic setting, So,
I think there, I think it's worth mentioning again the US-Iran peace deal. We're still waiting on details on whether or not it's going to be acceptable to everybody. And there's been a lot of trouble between Israel and Lebanon in the background as well. So again, if this, it's priced, oil is priced as if the deal is done. All markets are on highs, all-time highs.
Yeah.
So, if this deal falls through, there is a good way to come down. And again, all bets are off the table. It's almost like there's no upside. If the deal is announced and yes, this is the deal, it's acceptable to everybody, Israel and Lebanon will calm down and start respecting each other.
Yeah.
Great. But if any of those things fall through, oil is going to go up again. Markets are going to get jittery again. Volatility is going to rise. So
I'm still bullish oil. I'm looking in the market here. Oil now is down 3.5% this morning. It's $75. Oil is. People just think this is about turning the taps back on again. I don't think it is. First of all, there's going to be a huge rush from all countries to start buying as much oil as they can, because it'll be a little gap of time where they can buy as much oil as they possibly can before this might happen a second time. So I'm with you, John. I don't see why it's trading so low. Now it is 75.31 currently, but it's still, to me, that seems a little bit too low for what's
Yeah,
going on.
it's like all risk has been factored out. It's like everything's fixed, everything's good, and that's where stuff is trading. I think we'll get a little bit of ahead of ourselves here.
Yeah, fair
I
enough.
think the markets have.
Okay. All right, lads. We will go on to the portfolios now. Okay, so in the portfolios, I'm going to just go to the largest winner and loser for myself. LVMH, which I bought, it's drifting up nicely on a trend. We can see consumer discretionary seems to be rising as the war is ending. So I'm quite happy with that. Unfortunately, I took a bath on Cognizant. It came down 10% last week. Now, this is the AI war, or not war. This is the AI philosophy trade, as far as I can see. That's going on. I looked at through a lot of brokering houses, and it does have. It seems to be a moderate buy everywhere in most brokering houses, with a 12-month target of about $71.25. So it's currently trading 43. Now I'm down 10% of it, but I'm going to hold it. I think that until I see some real evidence that the brokers aren't happy with it, then I'm actually holding here, and I'm going to. That's the plan I have at the moment. Accenture pretty much had the same drop as well, Jeff. Did it had to sell off last week as well? Did it?
Yeah, it did feel pretty bad. It had earnings out. I think it could have been Wednesday, Thursday.
And what were the earnings like?
Yeah, very good. No, they actually were. Genuinely, they weren't that bad. I mean, and it was hard to really pick out why they would drop by nearly 20%. The sort of headline is they trimmed the upper end of their growth projection, from what was before 3 to 5%, and they trimmed it to 3 to 4%. I mean, they were a beat on quite a few of their of the top line, but
Really? So they were an actual beat, and they
I
sold
think
off.
so, yeah. But I think that the main problem is, you see, and I kind of only saw it when I was looking at the weekend. They're saying something that it wasn't the guidance downgrade that spooked the market. It was more they mentioned about expecting to raise long-term debt. And I think that's kind of a key sort of thing in the market at the moment. If you're raising debt, it's like, oh Jesus, like Oracle, every time they mention, oh yeah, we need to raise more debt. I mean, they get hammered. So the market doesn't like, I think, raising long-term debt at the moment. And they also mentioned that they're going to acquire or take majority stakes in sort of 3 companies that they already have stakes in them. I think somebody was saying, that just leads to above average risk because you're kind of putting together different companies and trying to come out with an outcome. So there's obviously risks and stuff in that, right? Because it's not like you're taking out one element and integrating it. You're integrating 3 elements into your systems. So I mean,
but this isn't a sort of happy-go-lucky company. This is this has a good solid structure.
yeah,
does. It's not like this company just started last year and it's kind of like, oh yeah, what are we doing here? It's like this, this is a very much a sort of legacy company, I would think. That's what kind of surprises me.
Yeah. Well, but again, I think that it's you mentioned earlier on, like it is sort of the anti. They're putting money into AI, and even like you look at something like SAP. I mean, they're putting money into AI internally. I suppose the market's sort of saying that, hey, if all this massive big AI and quantitative analysis kind of comes in, do we need all these consultants? Do we need all these? It'd be a lot easier just to flick a switch somewhere. And get your outcomes once these major programs are written, and you can kind of see that it sort of makes sense. So if AI sort of takes over a lot and it's able to do a lot of reasoning and a lot of an analysis of big data, which is there, how do these sort of consultancy firms look? Right. And so
but there's one part of AI that people are missing, and I was doing this with a podcast on AI a couple of weeks ago, is that these AI machines need to be trained. Okay, it's not like so if you're an AI producer, you need to hire people from Accenture, from Cognizant.
Absolutely. But let's say, for example,
train the machines.
let's say, for example, you hire the top, let's say, just make it an example, top 10% of all Accenture people that are top of their game.
Yeah.
And you have them working with the programmers and programming everything. All of a sudden they have all the information that's in there. You pay them all well, they're all happy, and now you have the databases and the systems there to run, right? Does that make
Yeah. What's your position? Are you holding this, or are you going
Well,
to?
I did it in the pension, I do have sort of a bit of an AI stock in there as well, which is going up. So
Okay,
it's
good.
kind of interesting, to see. So yeah, no, I'm going to hold it for a while, and I think again, when you look at the earnings and sort of the income, you kind of see that there's a company actually making money. It doesn't look that bad, and then like you look at something like, say, you're talking about SpaceX, a company that wasn't making money, and that's just going up and up and up. I mean, and
Yeah.
I suppose it is obviously growth and projections.
Yeah.
But it's only a small part of the portfolio. So yeah, I'll hang on for a while and see.
Okay, John, and what about your portfolio? Or overall, any changes, or are you just happy?
Yeah, my biggest loser is Cognizant. Again, that whole sector has been hit again. It's been hit multiple times. There's a number of shares. You can look at Capgemini, SAP, Cognizant, Accenture, Salesforce. They're all in the same space. They're all viewed as being vulnerable to AI, and they're all down probably 50% in the last year and a half.
Extraordinary.
So again, they seem to be making money still. Probably going to go a bit further, but I think long term, I think they should be okay. So I'm going to hang on to them. Obviously, not happy to see them go down, but I do have AI stocks in there as well, which are going up way above my expectations. So again, a little bit lucky there, I feel.
Okay, good stuff. One thing I'm just keeping an eye on, guys, is the German car companies. They've had a big drop in terms of their share prices. Now, this is because China is flooding the European Union with. But now they are good cars, BYDs. A friend of mine's got a BYD bought for 22,000, and my God, it's amazing. It's an incredible car. There's nothing wrong with it. I think the nearest Golf price is about 40,000, 35, 40,000. So the Germans are saying, look, we cannot compete with these Chinese cars. So the EU now, it's recently backed off. It was going to have a chat about tariffs with the G7, but apparently it's backed off over the past few days. They're accusing the Chinese of not playing a fair game. So this is one I'm keeping an eye on. If the European Union is talking more about tariffs, I'm going to keep an eye on BMW. It's currently trading €60 down from a high of 95. Now, it did have a large miss on expected sales, and this is owing to the Chinese imports. But I think that the Germans are going to start raising this more and more and more. So it's something that's a share price. Now there's lots of car companies, French and German and Spanish, but this is one I'm just going to keep an eye on. And if I see any sort of turnaround, I think I would like to get into one of the European car companies and buy their shares, but not now. Do you guys have any opinions about that, or have you?
Well, yeah, I mean, I have some Volkswagen shares there anyway, so as part of a diversified portfolio. But you can see, and I think the big thing here for me would be obviously the amount of, the unions and that are involved, the amount of labor that's employed by these big German companies, which is great because, it supports a huge amount of business and growth. But then, you have competition coming in with your BYD or your Teslas, which don't employ as many people. So even their cost per car is just to make is a lot more. So I think the German and say the French car manufacturers are not a great position at all, and I don't know how they're going to get out of it because even before, if you look at what they would have exported to Russia, maybe in Ukraine, that's certainly huge amount of cars would have gone to Russia. And then you have the problems with China. And if you start slapping tariffs on, I mean, China starts slapping tariffs on it, your LVMH won't look so attractive then because, that's money that, a lot of money, Chinese money flows into LVMH, right? So, yeah, I think there are there's a big, deep kind of conversation or sort of look through has to be done there because I don't know how they're going to bounce back out of that. You know.
Yeah,
yeah. Go on, Phil.
I was going to say in that as well. You know, if the EU do decide, okay, we're going to go ahead and we're going to try and protect German cars or European cars, there is going to be a spillover into all other industries, and it'll lead to trade wars, etc., etc. Everybody will lose. So, are Europe going to do that to try and protect the European car industry, which is a little bit inefficient? It's
Well,
hard
there
to
you
know.
go. Yeah, yeah. Is it efficient, right? There you go.
Yeah.
Yeah. I mean, the only thing they could move into is more arms production for Europe, right? Well, but then Europe's talking about having to arm itself, so you turn around
Yeah.
to the guys and say, well, we're going to have to turn your things into drone making and self-driving drone explosion cars.
Well, actually, that's interesting you say that, Jeff, because they did moot that maybe these European companies could actually get into robotics. They're perfectly set up for it.
Yeah.
And robotics is now the new buzzword. It's the new AI of the world. And anybody that says, yes, we have a robotics division, robotics.com, their share prices are jumping huge.
Yeah, well, I
jumps
think that China is so far ahead of that.
Yep.
Europe is so far behind. So yeah, I mean, they need. That's what I'm saying. They need to have a deep look through and see where they're going to steer themselves. Right?
Yeah, they actually do need a coordinated plan.
Yeah, if you think we're just going to keep going the same way and having it run, the company would love to cut 30-40% of the workforce, but obviously they can't. And then there's a historical sort of relationship there anyway.
Yeah, between government and unions, there is in Germany and countries like that, and they're not going to get away with just saying no. Okay,
but they need to have a look and say, well, what are we going to do here?
Yeah, they need a plan. They haven't got one.
They need a big plan. And I think as time goes on, it's drifting.
Can I ask you one question, Jeff? If Volkswagen changed over from making cars into tanks, would you keep it?
Well, you know my policy on arms and stuff like that.
You just wait for the pop, then you sell it and say, "Oh yeah, that's me out."
Yeah, well, I mean, could you drive the tank on the road? I mean, are they going to sell it to the consumer as well? I mean,
you've seen those big Tesla things.
Yeah. Well, yeah. I mean, all the Tesla truck just needs a turret, right?
Well, I think there's probably one hidden in there in some of them, some versions.
I know, but again, no, I wouldn't change around, Phil. It just look, I mean, as you say, they're talking about European defense, right? So whether we buy the stuff from the States or China or whoever we buy it or whoever we manufacture it, I mean, I wouldn't go out searching for arms companies. I'm not invested in any.
No, neither will I. My hope for those car companies is if we see any kind of shift towards robotics, which again they're perfectly set up to shift into.
Very good point.
Then I would take an interest in them.
Yeah.
At the moment, it just feels like you're catching a falling knife again, and I've tried to do that a few times unsuccessfully. So I might just steer away from.
Well, that's it. But if you look at the Volkswagen share price, say for the last 5 to 10 years, like it did pop from say 80-90 up to about 220, and but where is it now? 85. I mean, there's dividends there,
Yeah.
But,
and good dividends as well.
Yeah, and it's fine there, but as far as growth and upside,
it just goes to show you the effect that the Chinese cars are having.
Well, they're so efficient. They're so well planned. It's state run. Yeah,
state run. But also, do BYD make petrol cars, or are they just electric?
As far as I know, they're just electric.
Well, I would think they're just electric. They may, but I think that they've just not flooded the market, but they've learned how to make cheap cars.
Yeah, and good cars too, not just cheap ones.
Okay, well, look, that's something I'm going to keep an eye on. So when I hear Ursula talking about trade talks, it's something I'm just going to keep an eye on for coming in a few weeks. Okay, lads, we're going to leave it there, and that's very good. We'll have a chat about our portfolios again next Monday, and we'll see how we're doing then.
Okay, great. Okay. Thanks, Jeff. Thanks, Phil.
Thank you, lads. Bye.